Hey guys, Dan MacArthur here with Vibe Realty in Abbotsford, BC. Today I want to take you through an investment analysis of a condo that a client of mine was looking at purchasing. We've actually decided to walk away from that specific investment. It was an investment property, and I kind of want to take you through how we analyzed this specific investment and kind of why we walked away, and hopefully share with you some templates or some just methodology you can use when you're looking at investing or simply buying real estate to live in. So the property was in central Abbotsford. It was 954 square feet. Its list price was $285,000. We were prepared to offer $280,000 for it based on some of the recent transactions in the building itself. We felt that was going to be a fair offer for the property. We were going to put $100,000 down on the property, so we'd be financing $180,000 over a 25-year term. So there'd be 300 payments. Our interest rate would be 2.7%. So that would leave us with a debt service of $825.76 a month, and then a strata of $232, and then property tax of $1653. So all these sort of make up our operating expense as well as insurance. Also allow for a vacancy or an operating expense sort of coming down from strata, whether it be an assessment or anything like that. Again, vacancy as we just previously discussed. So currently they do have a tenant in there. They have been there for a long time. They really like the unit and they want to stay. Again, that's kind of what's driving a lower number there for that vacancy. Of course, if we had put an offer in and it was approved, we would have gone through the strata minutes and documents to ensure that the health of the strata corp was good and that we weren't walking into any sort of nightmare there. So right now they're paying $1,300 a month. So based on our analysis here, it doesn't leave us with a ton of operating income to deal with. A massive cash flow of $10 a month is not a ton in terms of our return on equity. As we look at increasing the rent as years go by, it's a very desirable area. It's a nice new condo. Definitely could see some scaling in the actual rental revenue. We've sort of forecasted for that in the coming years. Looking at return on equity, that original $100,000 that we've deployed every year. So this is effectively analogous to a dividend in the stock market. What are we looking at getting back on our initial outlay? You never want to see this in the negatives. I'm hoping to see numbers around 2.5%, 3%. If we come in, and this is what's nice about putting these models in, you can sort of play with different numbers. If we were to come in at straight up $285,000. And not finance anything. Let's hold on, $280,000 rather. You can see that we're seeing a 3.5, 3.9, around 4% return on equity. So I'll just change that back to our down payment of $100,000 for the purpose of this analysis. So this is what the operation kind of looks like. Let's look at what operations and our upfront cost to get into the investment itself. Let's look at the actual mortgage as well, and I think that this would add value for a lot of folks. A lot of people I chat to don't know where they're at in their mortgage. They don't know, what they're paying this month in principal, what they're paying in interest, what their remaining balance is. And this is very easy to lay out in Excel to get a whole schedule of this. And again, that gives you the flexibility to play with different numbers. So right now we do have that payment of $825. We have a principal of $420 that we're paying down in month one, and we're paying $405 of interest. Of course, as the schedule goes along, there's a point where you pay less. You start paying more in principal and less in interest that goes down to where in the last month you're paying very, very a small amount of interest. So when we look at our timeline for cashing out at that 5-year mark, we would have built just shy of $27,000 of equity in this property. So looking at the sell situation, this is where you sort of have to rub your crystal ball and make decide where you think the market is going to be when you want to cash out. You don't want to be forced to sell if it makes sense to hold. If you're in one of these valleys, you want to have the flexibility to in that down payment money to actually hold the investment for a bit longer. So what I'm looking at here is, in 5 years, we're looking at 11% projected forecast. 11% increase in overall sale price from when we bought it. If you look at actually this model here, someone who bought in 2012 would have seen a 19% increase in their equity, their sell value from 2012 to now. Of course, if you bought in one of these valleys, you'd realize even more of that. And this is just average sell prices in this sort of segment throughout the Fraser Valley. This is for the last 5 years, and this is looking at the market over the last 12. So based on these numbers, we're going to net out at $46,000 after that term. And this is an investment that we've decided to walk away from. He felt that he could do better on the stock market. He felt that he would see, when we come back to these numbers here, these return on equities, some of the blue chip stocks would be paying a little bit better than that return on equity, and he was felt that their appreciation was going to be more stable, which is, this is what you're competing with when you look at real estate investing or you look at investing in the stock market. So that's just I just wanted to take you through how I look at investments, real estate investments, and even just buying real estate for yourself to live in. What are you going to be able to sell it for at the end of the term when you hold it? Are you planning to add value? Is that adding value going to increase? Where you can, when and where you can sell it in terms of the market. So just good things to model out. If any of you are interested in having this Excel template, I'm more than happy to send it your way. Well, thanks, guys. I hope that was somewhat helpful. I hope you have a great rest of your day, and we'll talk soon. Bye.